Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now.
You brought
Yeah.
up a company that I have been aware of for quite a while, located here where I live in the Minneapolis area. Sleep Number. Tell me a little bit about Sleep Number, why you like them.
I think everybody knows Sleep Number at this point. It's a company that has been public for almost 30 years. It's been around for obviously a little bit longer than that. But it is the mattress that you find whatever your number is. Very popular brand, very well known, and it's a premium brand in the mattress space. I think that you could look at some general mattress trends and say that there is a trend towards premium mattresses over just your entry level mattresses. You can see that over time. But basically, this is a company that is creating a product. It goes through cycles of demand. Sometimes demand is up, sometimes demand is down. But generally speaking, people are always going to buy mattresses, and Sleep Number is a very well known brand in the space.
Why is it so undervalued in your eyes? Is it just, this seems like one of those spaces where there's been some competition coming into the market, the Casper mattress kind of thing, but it seems like the direct to consumer was maybe not quite what we thought it was going to be. Sleep Number does have locations, which is a risk, but it's also, you can actually go out and try the stuff. So what do you think is overlooked by the market and from a valuation standpoint?
To your point on the locations, I personally own a Sleep Number mattress, and my wife and I, we thought we were going to go with a Purple mattress. We went and tried out Purple, and then went to the Sleep Number store and tried Sleep Number, and we went with Sleep Number. It is something it can be advantageous. I won't necessarily call it a competitive advantage. It can be advantageous to have those stores, but as you pointed out, it is a risk. So as you look at Sleep Number over the years, sales have ebbed and flowed, profits have ebbed and flowed, but the general direction of the business is up. If you look at the stock price, the market is prone to insane reactions when things start to ebb. And so over the last almost 30 years as a public company, there have been two occasions where the stock has fallen 90% or more. On those two occasions, the stock was trading at 0.2 sales or less. Now you look at the stock price right now, down 87% last I checked, trading at 0.2 sales. So it has been in this territory before. The market has completely just thrown it out. If you bought Sleep Number at many different times, it has not panned out to be a good investment, at least not market beating. But if you bought the dips, those were very good times to buy it for the long term at a very attractive price. So I think that we're in that dip territory that could make this attractive for a long-term buy and hold. What is also interesting is, okay, Sleep Number is still profitable on a generally accepted accounting basis for this year, 2023, expecting ongoing profits. So it's not like they're losing money. Then when you also look at what they do, capital allocation perspective, I think that they can invest more in technology. They don't really do that. They invest more in share repurchase. And okay, we can bicker on what's the better use of money, but the results are undeniable. So over the last 10 years, revenue is up about 127% for Sleep Number. Not that great when you're thinking about over 10 years, only a little bit more than a double. But revenue per share up 466%. They have repurchased so much of their stock that it's basically a 4 times better revenue per share growth than just revenue growth alone. And so that is actually pretty good if you're looking for a market beating investment, revenue per share growth. So this is one of those things where the stock is low now. How long will it stay low? No idea. Normally these are prolonged, multi-year, 2-3 years, the stock just in the dumps, but the business starts to recover. It's still profitable right now. They're still making repurchases right now, but as those earnings rebound, you have more firepower to buy back your stock at a very depressed level and reward those shareholders who are ongoing.
Yeah, I want to put some numbers to this because I think this is interesting. Revenue, so this is since 2015. Revenue has grown at a compound annual growth rate of 7%. The shares outstanding have declined at a compound annual growth rate or negative growth rate of 9.6%. So buying back almost 10% of the stock every single year. The market cap right now is a little under $500 million. In fiscal 2022, quarter ended January 2022, the company made $154 million. So we are absolutely in a swoon. But as you see these ebbs and flows, like you said, the down years are bad, but they're not terrible. You're not like bankrupting yourself. And the good years are great. Like literally the stock is trading for under 4 times a year ago's earnings. That's incredible. And especially like you said, this is a company where management has been able to allocate capital, buy back shares effectively over time, over a long period of time. So that's the kind of track record I like to see.
You are zigging where the market is zagging because you're betting on everything that's been in place for the past 20 years continuing over the next 10, 15.
Yeah. All right. I love it. Thank you, John, for all of your insights.